Good morning, good afternoon, good evening, folks. Michael Zuber, run one rental at a time. Easy for me to say. How you doing, Dustin from Convoy Home Loans? I got your name right, at least.
Yeah, you did. I'm doing good, thank you.
Hey, so I don't know if you heard, but the Federal Reserve raised rates yesterday another 75 basis points. They came out in the Q&A section and basically said, guys, we're going higher. So I'm guessing the mortgage market just blew up. It just totally tanked and rates went nuts, right? That has to happen.
Yeah, well, it was funny because it was a little bit of a head fake. Initially when it came out, and obviously everybody knew 75 was coming. But his plans, or the Fed's plans at least, to not necessarily stop on the amount of increasing. Sure, they're going to slow, pardon me, how quick they're moving, but the fact that now we may see this, go until the end of 2023, Q3, Q4. I was always, over the last couple of months, hopeful we would be done or pausing at least in Q1, but that doesn't seem like is going to happen anymore. And I think that's what shocked the market, obviously, yesterday. It wasn't the fact that we went up 75. Everybody knew that. There's got to be
Yeah.
a surprise factor for the market to be kind of, reacting to anything positive or negative. And the shock factor was exactly his comments in the
Yeah.
press release about, this is going to last longer than you guys think.
Yeah, I think that is exactly right. The 75 was known. The press release came out to your point, and to most people, myself included, was softer than I wanted, or at least softer than I thought he should be. Dovish, to use speak that's in the industry. But then he came out and he just rained cold water on it.
Yeah.
And
Yeah.
yeah, yeah, like you, I thought they were going to be done in Q1. I now think it might be late Q2, early Q3, because I think they're eventually going to slow down, which means we just keep getting more quarters, like kind of like Greenspan, where he raised rates 17 times in a row.
Yeah. I think we've spoken about it enough on any of our, interviews, we'll call them that. I just want them to rip the Band-Aid off and be done with it.
Just
But
be done. Get to
yeah,
some plateau. I don't care if it's 4.5, 5, 5.25, 5.5. Just get there, and then just stop with them. Let us reset for a year, right?
yeah, that's that was the hope, but I don't think that's happening anymore. But once again, you never know with them, and I think he mentioned something about, which is, you know, in some point in 2023, federal fund rate being above, PCE, I think was a kind of telling point that I haven't really heard him talk about too much.
Yeah.
Uh, it's always been CPI, and if you want to say that PC is more important, I would be one of those that would agree with that. Um,
Yeah, yeah, I brought that up this morning. I think you're absolutely right. If you were paying attention, he told you what the goal was. And I think you're right. It's PCE core. He even named the number. He said it was last reported 5.1. People pay attention. He's telling you the target. So all of us should hope for in the next 2 months that PCE core goes sub 5. Because if it goes sub 5, all he has to do is get us to 5. He wants the Fed funds rate restrictive and above PCE core. That's the number to watch. If PCE core goes up to 5.5, or heaven forbid we get back to 6, watch out.
that was exactly what it kind of told me. I was thinking the same thing. Like, he literally just hinted at what his goals are, and because now after what yesterday we're at 4 basically on the federal funds, so we can get to 5 pretty quickly at this pace, and possibly still Q1 like I wanted if that's the actual goal of him and the feds.
Yeah, so we have a couple of more CPI reports. We have one next week and then one in December. I think right now, my best guess is we get a 50, but certainly 75 is like if PCE core goes up, 75 flips to the most likely. I think it's that simple. We watch the unemployment claims, the job market tomorrow is a big number. Expectations 200. We come in above that, 75 goes on the table. We come in below that, 50 is on the table. Very,
Yeah,
very much data dependent, but it's really between 75 and 50 next month. What do you think?
I agree. I mean, it's got to be between 50 and 75. I'd say right now, I believe 75 is more likely just given the pace, but
I think
you
so.
know, if he comes down, then sure 50 could be more likely at some point.
Very, very cool. Well, this is a lot of fun. Again, mortgage rates didn't really move because of the 75. It was the Q&A session where he said we're going higher than you expect. That's
Yeah.
moving the market to nine. I'm guessing you got some rate resets this morning in the conventional market.
In the conventional market, for sure. I think what did the 10-year when I looked 30 minutes ago is back at 418 or
So,
something.
yeah.
Yeah. Last week when we were talking, we were like, wow, it went from
Yeah, it was
14
under four.
up and now it's just, I mean, these swings are almost, you know, it's pure comedy how much we're seeing the 10-year move bips wise compared to what we were so accustomed to, for the
Yeah.
last 8 years. It was, a couple bips here, a couple bips there, but now we're talking 20, 30 a day. And it's just like, I don't know.
That's not normal.
Yeah.
That's not normal. Do me a favor, Dustin. If somebody wanted to reach out, see if you can help them, how would you want them to do that?
Yeah, please go ahead and email us at a private client at convoyhomeloans.com. But got to give a shout out to John because we finally got our new website up. So please go check it out. Just convoyhomeloans.com. You can click contact us, apply now, any of it, but there will be a drop down specifically for one rental at a time members. So we're happy about that.
Do me a favor, folks. Go to the website today. Go test it.
Yeah.
Go see how it works. Make sure all systems go. And Jonathan, nice work. I know building out a website like that's not easy to do. So, congratulations, buddy. Thanks, Dustin.
Thank you.